According to AIQ Asset Management and LPL's research team, every so often Washington likes to remind us how hard it can be to get things accomplished. The most recent example is the debt ceiling, the amount Congress can borrow to pay its bills. It seems like we have this debate every few years and in the end a deal is made, which is exactly what happened this time around. Considering equity markets never really reacted to the drama, perhaps this is a good reminder that focusing on long-term objectives is the best strategy, even amid a fair amount of market noise. With the debt ceiling drama behind us now, markets will likely return their attention to topics such as inflation, the health of the economy, and the Federal Reserve, who's scheduled to meet June 14th and 15th. Expectations are that they'll not raise short-term interest rates for the first time in 10 meetings. The Fed has done a lot of heavy lifting already, raising short-term interest rates by 5% in just over a year. Since rate hikes tend to have a long and variable lag, the Fed wants to see how those rate hikes more fully flow through the economy before its next move. The Fed's goal has been to elevate the Fed funds rate and make the cost of borrowing money prohibitively expensive to slow aggregate demand. While this has exposed some cracks in the regional banking sector, it should allow inflationary pressures to abate. But then what? After winning its fight with inflation, the Fed is expected to possibly begin cutting rates maybe early next year. Just as the aggressive rate hiking cycle took Treasury yields higher, interest rate cuts will take Treasury and other bond market yields lower. Both lower inflation and an end to rate increases could be welcome news for core bonds, especially intermediate core bonds, which have tended to perform well after rate hiking campaigns. Investors may be served better by locking in those higher yields before they're gone. Only time will tell, but it feels like we're possibly on a path to lower interest rates and possibly lower inflation. Of course, there will be other challenges to deal with. That's just the nature of the market. But in the meantime, returning to the familiar, lower interest rates and lower inflation is something we can all rally around. And other than that, that's it for your market recap. If you have any questions, feel free to reach out. And as always, thank you for watching.